so what we're going to be going over here today is children's whole life insurance, or specifically life insurance protection for children. So I wrote down a couple benefits here, and I'm going to basically go over how these work. So what I'm going to do is I'm going to rattle through these, and then I'm going to go over a couple of examples of situations that I've run into. Okay, so the first benefit would be the price lock. So whenever you purchase a whole life insurance contract, it locks in the price, and that premium can actually never change based on the contract that is issued by the insurance company. So typically, kids that are, the younger the child is, the less expensive the insurance is. So typically, overall, the cheaper the insurance policy is for the parent to be paying it. Number two is guaranteed purchase options. So a lot of life insurance companies have different options where when a child achieves a certain age, they can purchase additional life insurance, and it's a guaranteed purchase. So it doesn't take into consideration health factors or anything aside from increasing the cost of the policy. This is really good if you have children with pre-existing conditions and things that will make them less insurable in the future. The third benefit is cash value growth. So whenever you buy a whole life or permanent life insurance policy, there is cash value that does grow. Depending on whether it's with a mutual company or a stock company is how much it is, but there's different things we could get into on that, but I'm not going to go into those at this time. But whole life insurance grows cash value, not necessarily just what Dave Ramsey said. So really quick, if you like this video, be sure to hit the like button, subscribe to my channel, I appreciate it. The next option is, or the next benefit rather, is it's cheaper overall. I'm going to go over that in an example here coming up. And then the last benefit is there's an asset that the child has later in life. You can use these and structure these different ways where they plan on taking out some of the cash value, whether that be for a house, whether it be for a car, college fund, college funding, stuff like that. There can be a benefit. So I'm going to go over an example that I ran, actually just ran over this with a friend of mine. Okay, so he has a child. She is 12-year-old girl, and she has a pre-existing condition for diabetes. Okay, insulin dependent, takes insulin, and so basically what we ran an illustration for is for $60,000 of death benefit, the yearly premium was $320. Okay, so for $320, she has $60,000 of death benefit that grows every year with the cash value. Okay, now that breaks down to about $26 per month. And he would actually, because of the way we built that policy, he would only pay that for 17 years. Okay? So the total contract was $5,441 that he would pay into that over a course of 17 years. After that, the cash value growing within the policy would be able to pay that yearly premium. So as premiums go away, he doesn't have to pay any extra. And then by the time that child reaches age 65 or 70, she would have about $40,000, or she would have a death benefit of like $80,000 or $90,000. Okay, so that's an example of that. Now, there's another child that I quoted. Oh, really fast, I'll go over this. So this 12-year-old, we put a $30,000 guaranteed purchase option, okay? So when she reaches age 21, 25, 30, 35, and 40, she could add $30,000 each time. Now obviously, If you added it at 25, the premium would increase based on that, so that would change how much you have to pay for the policy, but it would take into account she already has diabetes. It could not be declined for any reason because it's already been issued. And that's that benefit of that guaranteed purchase option. And then it would lock in at that new rate, and then it would have to make payments on it as per an illustration at that time. Okay? That's just one of the benefits. There's another one where a 9-year-old, $25 a month would be about $60,600 in death benefit, 17 years paid up, and the total contract would be even less. Okay, so that gives you some of an idea of a benefit of children's whole life insurance. These are very cheap policies. They're very simple. They're typically non-medical to issue. Just answering a bunch of yes or no questions. They're all going to be issued standard rating, and it's very simple, and it's a very effective measure. We'll get into more advanced stuff in other videos, but if you haven't thought about it, if you have any questions that I have not answered in this video, be sure to comment below. Like my videos, share this with friends that have children or need this or haven't ever thought of this, because it is something that you can give as a gift that's rather inexpensive, all things considered. So if you got some value out of this, be sure to let me know. I love you guys. Be great.